It is time now for Better Money, and we have a question for you. Do you know what an RMD is? Well, it's actually a required minimum distribution. Might sound confusing. Here to explain is Joel Johnson. He's a certified financial planner and managing partner at Johnson Brunetti. Thank you so much for being with us.
It's great to be here, Kara. We have a lot of questions that we get from our viewers on required minimum distributions. And so today we want to answer some of those questions and make sure we clear up some of the confusion on required minimum distributions.
Yeah, so we're going to take some of the frequently asked questions. We know some things actually have changed since last year for RMDs, as they're called.
Correct.
Number one, what types of retirement accounts require an RMD?
Most retirement accounts require an RMD. Now, if you have a Roth IRA or if you have Roth money in a 401k, you've already paid taxes on that money, and so you probably don't have to take an RMD. In fact, you don't have to take an RMD out of that money. Sometimes in the 401k, though, you have to separate the money out. So it's a little confusing when you look at your statement. But if you have Roth accounts, no RMD required. Almost every other retirement account, you have to begin to take RMDs when you're 72 years old. They're going to force that money out of your retirement accounts, which means you're going to pay taxes.
Okay. Just basically, if you were lucky enough to save and never touch it, you have to start taking some.
Yes.
Okay, that's what it is. So how do you avoid paying taxes on the RMD?
It's almost impossible.
Okay, so that's part of life.
Yeah, what you want to do is before you get forced to take the RMD, maybe in your 60s, you want to get control or have a plan for that RMD. Don't just, go full face into the age where you have to take the RMD and not have a plan for it, because you might want to freeze the growth of your retirement accounts by starting to take money out before you have to. Okay. And that way it minimizes a tax problem. It also has to do with who's that money for. If you hope to pass it on, sometimes it's good to convert some of that RMD over to a Roth.
Okay. How much tax should I withhold from my RMD?
Obviously, this depends on your tax bracket. It depends on your total earnings, but you always want to withhold some tax. It's just better not to have to write that check to the IRS. A general rule for most of our clients who are upper middle class would be withhold 20% from the federal government, and also the minimum for the state now is 7%, unless you kind of jump through some hoops.
Okay, and what happens if you just don't take the RMD?
There's a big penalty. Okay. So what's going to happen is you have to then take out the RMD, plus there's a 50% penalty on what you should have taken out. Wow. So you've got to take out the RMD, pay taxes on that, and then let's say you were supposed to take out $10,000 and you didn't, there's an additional $5,000 penalty. It's a really bad thing, so make sure you take out your RMD.
Okay. So you got to follow the rules. You want to learn more about the rules? Joel has a free offer for you. It's called The Money Map. It's a book that you've put together to help people live a better life when it comes to money. And this is free if you just go to bettermoneytv.com. Okay, so visit bettermoneytv.com, and you can give this book out to people for free.
Absolutely, and it's not just about RMDs, it's about all-around financial planning for retirement. So it's a great resource for people.
Written a lot from your personal experience.
Yes,
and some of the wisdom handed down to you from your grandfather
and some of the mistakes I've made.
Yeah, okay. So the offer's free, and you can get it right now. Joel, thank you so much for being with us.
Thanks, Kara.
That's Better Money.